What's up, everybody? Welcome aboard. It is Trading with Bubba. It is Thursday, the 8th of February, and markets continue to fight to higher levels. We made new highs, as we talked about the other day, 5,000 S&P. We're over that right now. I would expect to see the NASDAQ get to 18,000, the Dow possibly to 40,000. Again, listen, here's what you got, okay? It doesn't matter why. Volume is declining, which is not a good sign. But the markets continue to fight or climb, as they say, the wall of worry. We continue to go higher. And, even when the markets are trying to rest, you get some movement. And as we look at the real quick short-term stuff, you can see the NASDAQ futures spiking higher here. The S&P trying to get back to break even. Again, you're seeing all kinds of wild action as we trade. But as we look at our group of things that we like to look at, Apple, which is still trending lower, almost reached up to our little bit of resistance. So again, as we stay in the mode of premium selling right now, because one of the things that we don't want to do is we don't want to commit to a position here because of the lack of overall activity in the market. So Apple continues. I would continue to look to be a seller about 190. Now, the one key with Apple today is tomorrow morning is ex-dividend, so you don't necessarily want to go and be short calls into tomorrow because, of course, you don't want to pay the dividend. Amazon continues to climb higher, and it's trying to resolve out this overbought by going sideways. Look, at the end of the day, I would be a seller of call spreads up about 173 or so. In coin having a big rally today, running back up towards the upper end, towards resistance. And I think if it gets to the 140 level, probably a pretty good spot to sell some call spreads right here in the middle. We're really in the middle of nowhere. There's not a lot to do right here, so I wouldn't be overly extended on anything. Meta, very similar to Amazon, kind of hovering after that big gap. Now, I would expect to see a little bit of a pullback here at some point, but right now, you're building a new base of support at about 450. It looks like you're about 450 to 480. So at 470, what are you going to do? You're going to have to guess which side. I mean, if you're an iron condor trader, you can maybe sell some iron condors, but I'm not a big fan unless I can get enough credit for that. So that would be something that I'd be looking at. Google continues to now try to break out, but still right at resistance. Okay, I would still want to look to be a general seller here in premium. Again, I'm looking right now to sell call spreads and put spreads because, again, I don't want to expose myself to any real risk. We know there's risk there, but again, it's limited. I don't want to give up time decay. So I want to take the advantage of time in these really somber, slow trading markets right now. IWM, okay, is kind of just hovering around nowhere in the middle. Again, I would look to be a put seller. It would break a little bit here, but it is rallying this morning, which is not a surprise. You're kind of in nowhere's land. You're kind of in mid-range. Not a lot to do. Microsoft up at the top end. I would be a seller right here of some premium, some call spreads for tomorrow. Again, I like to go the shortest possible time I can go when I'm selling these here. NVIDIA breaking above 700. Look at this. So again, I would want to see, before I'm going to do anything in NVIDIA, it would have to either make another huge blow off up, okay, or come way down. But right now, it's just overbought. But again, I'm not going to get in the way of it right now or fight it because I don't see any real problem or any benefit right now. And there's other things to trade. The Qs, there I would be a seller like at the 435 level, okay? And again, it doesn't make me bearish or directional on any of these. All I'm trying to do is play the probability of the market and where it's at and where it's placed. That is really what it comes down to. Square, once again, up around 70. I'd like to sell some call spreads. The SPY, right here, about 490, about almost 500. I'd be looking to sell some call spreads. In Tesla, look, we're in the middle. All right, so 200, I'd be a seller of call spreads. 170, I'd be a seller of put spreads. In the middle here, why do I have to get involved? There's enough things to trade that I don't have to be overly involved in any one area because I can always find something else. Look at what's going on with wind. Straight up. Now, this is probably a potential blowout trade. Now, we don't have enough volume yet, but by the end of the day, if this stays up here, And if you see a little bit of a pullback, you probably want to sell like a deep in the money call spread here, okay, to play for the downside. And again, if you forget what I'm talking about, okay, if we look at when, okay, so what I'd be looking at is probably for next week, and maybe sell the 97.50. Oh, we got 97.50 vertical. Target filled. 97.50, 109 or 110. What do we got here option wise? So the 97.108 call spread. Okay, not traded. Okay, where am I at here? Why is it not traded? Oh, that's why, because I'm in the wrong thing here. Okay, so the 110. Okay, 97.50, 110. So I've got 12.50 worth of risk. I'm collecting 9.29. So basically, I am buying the 110 put for next week for 3.45. Okay, so again, it's a way to go ahead and look at this, and you've got some premium to collect. You want to go a little bit narrower, you can go down to the 105 and look for a total break. Okay, where you're buying the 105 put for about for 90 cents instead of $1.40. So again, you're using the markets to your best advantage, okay, to give you the best opportunity to make trades. And again, I think that, you know, we told you that Zoom looked pretty weak, and it does. But again, if you just sold premium here, you're really sitting and waiting, because again, when you sell a spread, okay, when you sell a spread, you don't need it to go directly in your favor. You just need it not to go against you. Okay, and that is something that you have to always remember, is when you're trying to sell premium and you're selling time, okay, all you want is the market not to go against. Okay, that's all you're really doing, is playing the calendar. You're playing the time. Okay, so if you put yourself in that position, you keep yourself with the opportunity, because again, you don't have to be right, you just can't be way wrong. Okay, I hope that makes sense, everybody. But again, it's the objective. You know, we've got a lot of things going on right now between the Fed and all their speaking. And when did we want to hear so much from the Federal Reserve? Okay, you know, if you go back when I first started trading, you never heard from the Fed. Now you hear from them every day. They got speakers every day talking about rate cuts. Now, when you look at the data that's come out recently, can the Fed cut rates? How can they cut rates when you look at the overall sequence of the market? If the news is as good as they say it is, how can they possibly cut rates? Okay, doesn't make a lot of sense. So if this whole rally was built on the potential of a rate cut in March, how are they possibly going to cut rates with the data so good? Okay, now again, I can find flaws in the data that they have. But what's the difference? Okay, if you believe it, then you believe it. But at the end of the day, jobs numbers continue to be good. But remember, those are more government jobs being created. So at the end of the day, we're paying for it. Okay, the people, the taxpayers, are paying for these jobs that are being created. Okay, these aren't building, these aren't making something new. These are jobs that are being created by the government to keep the numbers good. We're in an election cycle. So there's a lot of things to look at. But the biggest thing that you as a trader have to remember is to be patient. Okay, you have to wait for your opportunities and not try to get in too quickly, not try to predict or time the market. Okay, you have to continue to play the game that is there for you. Okay, and that is by using the probability model of what should happen based on what the markets are telling you. Again, if we go back and look at a very short-term charts, okay, I'm going to look at these real quick. So what am I looking at here? Well, this just shows me, and it doesn't matter what this is, it happens to be crude oil, but that looks to be a little bit of support, okay, on a very short-term basis. So I'm looking at an area that if I were looking to trade, I might be looking to do something here. Now, again, for me, on these short-term charts, I'm looking for very high volume in one direction or the other. I don't care which way. In fact, we have a trade on from this morning where we're short crude oil from here. Okay, and I'm still short it. Okay, it's now coming back in that maybe it'll come back and give us a it let us be a winning on this trade. We've been holding it all day, but we set our stops at such good levels that we have not reached those stops yet. Okay. But again, you have to let the markets trade, because right now, as you can see clearly in the short term here, the Dow is a downtrend, the Nasdaq is an uptrend, the S&P is going sideways, okay, and the Russell is trying to spike higher, okay. Those are the four major indices that we're watching. And again, what do you do with it? Well, you have to use the charts for your best interest, okay. If these were longer term, you'd look to be a seller of put spreads here, or a buyer, okay. Here you'd look to probably be a seller. Again, it's a probability model. That's really what you're looking at. You get gold, which is now coming down to some support here. It's got some resistance, pretty narrow range. So what we're really seeing is everything is in a fairly narrow range, which makes trading a little bit tougher, which is why we're sticking to the selling at premium right now, because again, there's no real benefit to take a big position or a big directional position right now as we watch, because again, we go back and take a look at the spiders again, and you can see that here they are. They're holding and failing here, which is exactly the way you'd be playing them. Again, it's not that they're dramatically going lower, but they're just not going higher. And so if you're selling the premium, remember, if you're selling the 0 DTE or the 0 days expiration options, you're only waiting for 4 hours now. Okay. This is almost over. So if you can collect some reasonable premium, okay, then you're going to be able to get paid, and the day is going to be over. You're going to be out, you're going to have the money, and you're going to be ready to go. Okay. And look for the same thing. And of course, when you get to an expiration, which is every Friday in a lot of these now, you've got either 1 day or 0 days, either today or tomorrow. So these are big opportunities to try to collect some premium for yourself, to continue to build your account a little bit, but not take a lot of risk and explode and expose yourself. Okay. That is something that we have to always remember, is that we don't want to put ourselves in a position where the risk is greater than either our account can handle or we can emotionally handle. Okay. Because we all know that trading is a very emotional business. And if we put ourselves in a bad position mentally, it's going to be very hard to flow correctly. And I think that is something that you have to always remember. Okay. Is if you put yourself in a bad spot mentally, okay, then you're going to be punishing yourself, because you're going to make bad decisions based on that, which is why we try to treat this as nothing more than a math model. Okay. Trading is nothing more than a probability model. It's a game. Okay. Very similar. The big games that play poker, bridge, backgammon, and gin, those are all mathematically based. Okay. So again, you're not going to win every time, but as long as you're holding and keeping probability in your favor, okay, you are giving yourself the highest percentage of winning. Okay. And again, we know that if we collect more than we lose, then we're going to net make money, net make a profit. And I think that that's something that you have to remember as a trader, is you're trading the probability. You're not coming and saying, oh, well, I heard on the news that this is bad, so I'm going to sell. Look, the markets don't care. The markets trade off of the order flow that comes in. The markets trade off of the business itself. They have no emotion. They have no opinion. They don't get sick. They don't get tired. They're open 241 days a year. And the more you try to tell them what to do, the greater likelihood that you're going to lose money. You have to follow without opinion, okay, without the news, okay, what is happening in this market, okay. But if you want to see me on the news, you can see me today at noon Eastern on Cavuto on Fox Business. But again, you'll hear me say the same thing there, okay. I'm not going to try to predict this market. I think the markets are in a lot of trouble, okay. I think we're over leveraged. I think that nothing is really good. However, I'm not fighting the market. I'm net long right now, because why should I fight the overall tape or the trend? Okay. There's no reason to fight the tape of the market. When you do that, you put yourself in jeopardy. Okay. Again, it's easier to go with the flow. It's easier to for a market to fail when it starts to show you that it's starting to fail. Okay. But we do use, overbought or oversold conditions to try to create or generate some revenue, okay, or some income based on the overall performance of the market and based on what we can see and expectations based on how fast they've gone up, or are they overbought or oversold. And I think this is something that you have to always remember, okay, is to use the market to your advantage, okay, and not get involved with the nonsense. If you listen to the news, for example, remember the news, when you get it, you're about the 1 millionth person to hear that news, okay? So why would you want to get involved there when you can put yourself in a much better position, okay? I think that, we far too many of us look at the news, and I could make a case that this market should collapse today, or I could make a case that it's going to rally. But why shouldn't I just let the market tell me where it wants to go and follow the market where it wants to go versus me trying to tell it where it should go, okay? Because I will tell you, I do believe that there's a massive sell-off coming. But again, is it next week, next month, next year? We're in an election cycle, and only one election cycle that I can remember where the market's under a heavy pressure, which was 2008, okay? And that the whole cycle has been driven by just a few stocks here. So is it probability that they're going to break down now? We'll see. But I don't think that there's any reason to take a massive short position now until the markets tell you that it's time. I think that for those of you who want to continue to fight it, and this is where you talk about the markets climb the wall of worry, there's too much negativity. There's too much negativity out there with the traders, okay, that are and investors that are trying to convince this market to go down, and that makes it easier for the market to go higher. It makes it easier to climb the wall of worry. And I think that if you continue to try to fight it, I think you're going to continue to put yourself in jeopardy. And that, I think, the lesson for today is really to understand that all you're really trading is a probability model and a picture, okay? And where is this picture? If I were to try to project the future, where is this picture most likely to go? Well, most likely over time, for now, it looks like it's going that way. But for right now, it looks like it's running into a little bit of a roadblock. So that's what I want to play. I want to play that little bit of a roadblock, but be prepared, okay? But I can limit my risk, okay? Limited reward, limited risk, but I can participate because this does tell me that we are extremely overbought. We are at resistance. So why not try to take advantage of that and not put yourself in jeopardy and wait? Because when the trend does change, or when we do re-break out and start to get some action, there'll be plenty of times to participate. We just haven't seen that because, again, this rally goes back to October. So that'll do it for today. We'll see you back here on Tuesday. Just be careful. You can always observe the market. You don't have to play, okay? And if you want to be negative and be short, you're probably better off observing and waiting. Have a great day, everybody. We'll see you back here on Tuesday.